Picture this. While you and I are watching XRP kind of gently bob around at the $2 mark, someone else might be scooping up truckloads of it in total silence, and the market can't hear a thing. Kind of feels like discovering there's a secret door behind the fridge that leads to a vault full of coins. Okay, so quick confession. I've spent way too many late nights staring at the chart, coffee in hand, muttering, "Why aren't you moving, buddy?" We've had Brazilian ETF fireworks, a $1 billion Ripple acquisition, even a freshly minted petition demanding transparency. Yet the price has been flatter than a week-old soda. And then a post from their account, All Things XRP, lands on my feed, basically shouting, "Guys, dark pools exist for XRP." It's kind of like someone flicked the light on a house party. I suddenly realized maybe half the action was happening in the basement where the DJ was actually good. So what in the cryptoverse is a dark pool? Think of it as a private back alley market, except it's legal, above board, and mainly used by institutions. Picture whales waltzing in to buy or sell huge chunks of an asset without alerting the nosy neighbors. By the way, that's us retail folk. They walk out with their pockets full, and the public order books stay blissfully calm, avoiding those knee-jerk price swings that make traders spill their coffee. Now, our commentator friend claims that outfit, kind of like Kraken and kind of SFOX, already cater to this hush-hush crowd, and that Coinbase might be doing it too, though nobody at Coinbase HQ has slapped a confirmation sticker on that rumor. The idea here is simple. Big players don't want slippage or the "oh no, someone's buying loads, let me FOMO in" reaction. If you've ever kind of tried buying a low cap gem and watched the price leap just before you slapped in a market order, you get the pain. Institutions have that pain on steroids. So they want to build, well, secret tunnels. And here is where it gets juicy. We had Brazil launch the first XRP ETF, right? That alone should have had our beloved coin doing backflips. Then Ripple shells out $1.25 billion to snag Hidden Road. And again, you would expect at least a cartwheel. Instead, XRP yawns, it stretches, and settles back to its $2 hammock. Now that's when the dark pool theories start sounding less like a spooky bedtime story and more like a plausible Netflix docuseries. All Things XRP reckons he's 95% sure that whales are hoarding under the radar. Now he points to academic papers that show dark pools can muffle short-term price discovery, as in you won't see real demand pop up on public exchanges right away. It's kind of like watching a poker game only to realize half the players are in a side room making real bets. You're left wondering why the main table looks so, well, tame. Now, let's pause for a second. Imagine you're an institutional investor sniffing around XRP after the partial legal clarity last year. You like the tech, cross-border payments, the whole shebang. But you also know retail sentiment can be jittery. If you drop a buy order for, let's say, $50 million worth of tokens on a public exchange, alarms go off faster than a toaster on fire. Right? Prices spike, your average entry shoots up, and Twitter loses its collective mind. Enter the dark pool. You quietly negotiate, you get your fill, everyone's happy except maybe retail traders who keep refreshing the chart and scratching their heads. But it's not about the price either. Dark pools avoid the spotlight that could trigger regulatory questions or rival front-running. Think of them as noise-cancelling headphones for whales. You trade in peace and you ignore the crowd. But Nick, you say, where's the evidence? And it's a fair question. Right? The proof is circumstantial, but there's a stack of breadcrumbs. First, those exchanges that openly advertise institutional blocks or smart order routing, code words that kind of often hint at dark pool services. Second, the pattern. Every time bullish news hits, we get volume spikes that mysteriously don't translate to price breakouts. Third, you've got academic studies showing assets traded heavily in dark pools tend to lag in public price movements until, boom, it all spills out. One study even modeled how dark pool volumes above 10% of total turnover can dampen volatility by as much as 40% in the short term. The translation? The bigger the secret trades, the sleepier the public chart. Until it isn't. Ripple's radio silence only fans the flames. They churn out quarterly reports about ODL corridors and market updates, but on the dark pool debate, you get crickets, right? And to be fair, Ripple can't exactly peer over every institutional shoulder because XRP is decentralized enough that anyone can will and deal off exchange. Still, a simple yes, we see the trend, or nope, nothing to confirm, would help. Instead, community members started a change.org petition, over 300 signatures and counting, essentially begging Ripple to address the elephant, or shall we say whale, in the room. Now, here is why you should care, especially if you're a retail investor stacking bags. If big players are genuinely accumulating quietly, public supply is contracting without you noticing. Picture an iceberg, right? We're staring at the tip and thinking, nothing major, when a whole glacier sits underwater. Now, one day, the hidden demand could surface. Maybe an ETF extension hits the US market or Ripple wins another legal round. And price discovery finally reflects that backlog of buying pressure. Now, the result, a kind of face-melting rally that leaves latecomers chasing green candles like kids after the ice cream truck. There is a flip side, of course. If the dark pool's buzz is overblown, clinging to a conspiracy might keep you from acknowledging genuine weakness, macro headwinds, competition from newer chains, you name it. Critical thinking beats blind faith every time. Personally, I lean towards the middle. I think pools exist. They're as old as Wall Street itself, right? And I believe institutions see XRP's infrastructure value. But I'm also cautious, right? I remember 2017, riding the rocket up, and remembering 2018, cleaning up the kind of crash landing debris. Markets have no mercy for hopium. So how do we navigate then? First, widen your radar. Price isn't the only truth. Track on-chain wallets, monitor OTC desks, peek at volume on derivative platforms. Second, manage expectations. Right? If you're banking on a sudden moonshot, be ready for a longer accumulation grind. Third, plug into communities that share research in real time, like our free crypto Discord server. There's a link waiting in the description down below. I'm in there daily, chatting through theories, fact-checking claims, and swapping memes, whenever the market gets way too serious. So let me give you a real-life analogy. Think of XRP right now as a beach just before dawn. The shoreline looks calm, maybe even boring, but somewhere beyond the vision, or your vision, the tide is gathering, right? When the sun finally cracks the horizon, waves that you didn't anticipate can slam ashore. And you can either be the surfer already suited up, board waxed, or the tourist still fumbling with sunscreen as the swell rolls in. The climactic question is timing. right? We don't know when, if ever, the hidden demand hits the public books. Now, could be after regulatory clarity in another jurisdiction, could be post full settlement of Ripple's legal saga, or maybe a blockbuster partnership. But if all things XRP's 95% conviction is even half right, the risk to reward calculus shifts quite dramatically. Now, one last thought before we wrap up today. If dark pools are at play, they're soaking up not just the supply, but also the emotional energy that retail traders typically pour into a rally. That's FOMO, hype, the whole 9 yards. Then what's when that kind of dam finally kind of breaks, you'll have pent-up excitement colliding with genuine scarcity. That's a cocktail that makes charts look like staircases to the sky. Just ask anyone who held Bitcoin through the 2020 supply crunch. So, what's the bottom line? Well, keep your curiosity sharp, your thesis flexible, and your portfolio seized, so you can sleep at night. Now, if you catch yourself doom scrolling the XRP chart because it's moving slower than a sloth on a Sunday, remember, there could be a hidden party in the basement. And if there isn't, well, better to have checked the basement than to find out the hard way. Now, if this little journey fired up your brain cells, consider sliding over to our Discord server. It's free, it's friendly, and it's where we dissect mysteries like this in real time. Plus, there's always someone awake no matter what time zone you are in.